Hi, I'm Rick Kaler. Thanks for joining me. 4 years ago, I confessed in a column that I was guilty of day trading, except that as a political junkie, I traded in election outcomes, not stocks. I have no interest in betting on anything else, including sports and equity markets. My speculative adventures have been in the world of political prediction markets, specifically with PredictIt. The 2016 and 2020 elections, to me, were particularly thrilling, and I followed them like a political day trader timing the stock market. I checked my bets almost daily, reveling in the adrenaline rush of watching my candidates rise and fall in the polls. When my candidates were winning, of course, I was ecstatic, riding the high like any gambler hitting a streak. But when they started to lose, I was a ball of anxiety, torn between cashing out to cut my losses or doubling down in the hopes of a turnaround. Much like any speculator, I had my fair share of highs and lows. As you would expect with day trading, my long-term results weren't pretty. Since the 2016 elections, I've lost around 45% of the money I bet. Fortunately, I haven't gone as far as to risk my 401k. The total sum of my investment in 2020 was $10. When it was obvious I could only continue if I ponied up more money, I toyed with risking $50, but I just couldn't stomach it. I had added another $10, bringing my total investment to $20. Now, it seems my fun might be coming to an end, and that's according to a May 25th, 2024 article in Vox by Dylan Matthews. It was titled, "People Bet on Sports, Why Not on Anything Else?" The Commodities Futures Trading Commission, the CFTC, which is the federal agency that regulates financial products like derivatives, has voted 3-2 to propose a ban on event contracts, which would include elections, sports, and even events like the Oscars. While this rule probably won't take effect until after November, it spells bad news for anyone hoping to place bets on the 2026 midterms. The rationale behind the ban on prediction markets is pretty straightforward. The CFTC contends that they provide valuable information about future events. While such predictive information might seem trivial in the case of the Oscars, the CFTC contends that for something as significant as presidential elections, the disruptive potential of swinging votes is much too high. I wonder if the CFTC might make the same judgment about traditional polling. Most candidates would privately contend their campaigns clamor for all the help they can get in forecasting election results, whether from polling or betting markets. I find the arguments in favor of prediction markets pretty compelling, and the opposition pretty ridiculous. Sports betting is now legal in 38 states and DC. It just seems absurd that while betting on a Knicks-Pacers game is perfectly fine, wagering on a Senate race, which could encourage citizens to actually research and involve themselves politically, that's not. 6 Democratic senators have argued that billionaires could unduly influence politics through large bets while also contributing to their campaigns. However, billionaires already have significant influence through stock investments in politically sensitive industries. Britain's long history with electoral betting, which has been legal since 1961, has not resulted in the kind of manipulation feared by these U.S. senators. But instead, these markets have done a decent job of predicting election winners without causing manipulation or chaos. So when the CFTC's ban takes effect, my hobby of predicting political outcomes and occasionally getting it right will come to an end. Unless perhaps Congress passes legislation to make betting on democracy as commonplace as betting on the Super Bowl. Until then, I'll have fond memories of my adrenaline-fueled roller coaster rides in the political prediction markets. Thanks for listening.